The following is a paid program. Talk 103.7 WTIP and Cable Channel 7 welcome you into Financially Speaking with Jim Taunton. Find us live on radio, TV, the IPX Media app, and on YouTube. Just search Financially Speaking NC or get the link at WTIPFM.com. The opinions expressed in this show are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments may be appropriate for you, consult with your attorney, accountant, financial, or tax advisor prior to investing. Securities and investment advisory services are offered through Genoa Wealth Management Incorporated, member FINRA SIPC. Now, here's your host for Financially Speaking, certified financial advisor, Jim Taunton.
Welcome to Financially Speaking. Jim Taunton here, your host for the next 30 minutes. Glad you joined me. Wouldn't be much of a program without an audience of some sort. I'm sure I've got 2 or 3 people out there that are listening or watching on YouTube. The YouTube channel, by the way, is Financially Speaking NC. Just get on YouTube and search for Financially Speaking NC, and you'll find the channel. Subscribe. You'll get notifications every week when I go on the air. And you don't have to watch it, please. You don't want to look at me and my bald head. You can just listen. That would be fine. But otherwise, you can listen on 103.7 radio, and we're live on both. But on YouTube, you actually can pull up that program you missed and watch it anytime you please at your leisure. So that is pretty cool, actually. And you can call in with a question, and the number here is 252-561-TALK, 561-8255. Or you can go to YouTube and the chat box at the bottom, type in a question for me, and hopefully I'll see it, and I'll answer that on the air as well if you're too shy to give me a call. So, having said all that, if you call during the break, we'll take your call first when we come back. 561-TALK, 561-8255. And I'll be back in a couple of minutes.
Club invites you to become a member. Come tour our beautiful clubhouse, ballroom, and facilities. For a quality golf experience, sign up for our discounted special membership rates, low monthly dues with no quarterly food minimum or assessments. Folks love to play golf at Ayden Golf and Country Club. Cool off at the pool all summer. Enjoy excellent food and beverages from the snack bar. Even store your own cart, unless you like to walk. Call 746-3389 for special limited membership rates at the Ayden Golf and Country Club.
My practice has been built on accessibility, responsiveness, and a willingness to be proactive for my clients. I'm not afraid to make recommendations relating to your investments and planning. I do hope all of your financial decisions are good ones, but let's not rely on hope. Let's roll up our sleeves and get to work.
Jim has attained 3 professional designations: Certified Financial Planner, Chartered Life Underwriter, and Chartered Financial Consultant, which entails 20 courses of study with examinations and a comprehensive national board exam, administered by the Certified Financial Planning Board. Jim has been practicing in financial services since 1979, which includes investing, planning, and insurance to help you meet your financial goals. Among the many awards Jim has received in his career is his selection to the Guide of the Top Financial Planners by the Consumer Research Council of America. So if you want to work with someone who is working for you, call Jim at 756-4700 or email him at planning@financiallyspeaking.com. That's 756-4700 and planning@financiallyspeaking.com.
Welcome back to Financially Speaking. Jim Taunton here, your host. And I have a lot of information, and it's more than I probably will be able to give you tonight. But I'd really just soon not give you any of it. I'd rather answer a question that you may have that's pertinent to you and personal to you, important to you. So give me a call, 561-TALK, 561-8255. And let me look. Nope. Nobody has used the chat box on YouTube to send me a question, so I'll just start with the monologue, but interrupt the monologue anytime, please. Well, Jay Powell, the Federal Reserve chief, made some comments today that the market took very favorably. And what he said was, I'm going to give you the headline and then read you some of his comments, actually. And this is coming off of CNBC, but I actually have pulled it up on my tablet. You see people on YouTube, there's my tablet. So I don't misquote anybody. But essentially, he said that the Fed is not too far from the point of cutting interest rates. I think that may be the first time out of his mouth that he has indicated that easing is around the corner. He also said he thought that we were in the right place. So interest rate cuts may not be too far. So, and in the remarks to the Senate Banking Committee, the central bank leader, Jay Powell, didn't provide a precise timetable of when he sees easing happening, but noted that the day could be coming soon. So we're waiting to become more confident, according to Jay Powell, that the inflation is moving sustainably at 2%. When we do get that confidence, we're not far from it. It'll be appropriate to begin to dial back the level of restriction, lower interest rates, in other words. He also said, drive the economy into recession rather than normalizing policy as the economy gets back normal is not what they're looking to do, of course. And again, at the end, he says, I think we're in the right place. So those comments from Jay Powell were bullish, to say the least. So the market was up very nicely today, and I think, it just bodes well going forward for the market. At the beginning of the year, and you can hold my feet to the fire because I say this in a public forum on radio and on YouTube. You can go back to the YouTube on the YouTube channel and watch every program, and you can see exactly what I was telling you. So I can't retract a statement. It's archived, stored in the cloud forever and ever, always. But I told you at the beginning of the year that I thought this year was going to be a double-digit positive year for the market based on everything that I was reading and hearing from people that know what they're talking about. And lo and behold, we're already just about double-digit. I mean, in other words, we wouldn't have to go up any more than we are right now to have proved that statement to be true for the entire year. So it just feels like a very bullish market right now, and some people would say that that's dangerous. The contrarians would say it would be a time, if you were timing the market, which we do not do, it'd be a good time to retract from the market. But we are definitely not going to do that. Never have believed in timing. And again, I've told you in this program countless times, only twice in my career have I moved advisory clients' assets out of the market and into cash temporarily. And that was May of 2002 and August 16th of 2007. And that was it. That was a fundamental issue. And I could actually grip it and see it and smell it and know it was there and know it was going to take a while for it to work through. And that was the reason I did that. The only occasions I've ever done that. So do not call me a market timer, please. All right. Other thing I mentioned, not the beginning of the year. I did mention the beginning of the year, but the first time I mentioned it to you was probably a year and a half ago, at least, maybe 2 years. Could have been 2 years, year and a half to 2 years. And that's NVIDIA. And you keep hearing about NVIDIA on the financial networks, I'm sure, if you watch those things. The rise in NVIDIA, as spectacular as it has been, is not unprecedented. We had companies that were rising like this back in the late 90s. A lot of the internet companies, because it was just on the cutting edge of that technology. And I mean, you could form a corporation and call it an internet company, and your stock was going to go up 300%, in a few months. And so we had what we called the dot-com bubble for that reason. And there's a big difference, however, between NVIDIA and the dot-com companies of the late 90s. There were two differences between NVIDIA and those dot-com companies, and why NVIDIA is not a bubble and why they were. Number one, NVIDIA actually makes a product that is in demand and will become more and more and more and more in demand as time goes on. And that's chips, microprocessors for computers that will enable computers to engage in artificial intelligence. So they make a product, a real product, something you can put your hand on. Secondly, NVIDIA has earnings. They not only have earnings, they have excellent earnings, and they have excellent growth of their earnings. The companies of the late 90s, the internet companies, did not have earnings. So NVIDIA is in a much better position to support their stock price than these companies in the late 90s. I do not see NVIDIA, the price increase in NVIDIA stock, as a bubble. I see NVIDIA like Apple. When the cell phones first came out, started becoming popular, I mean, Apple stock just went up and up and up and up and up and up. And guess what? It's still going up, and it's not going to come back down anytime in the near future. And there are some other companies that we could mention, but yeah, it's, I mean, NVIDIA is just, gosh, in 2.5 years, it's going up, what, 250, 300%? It's incredible. And, we just don't see that slowing down much. It was up astronomically today. Matter of fact, let me pull that up. It was up $39.69 on a $926 price. Let's just see what that percentage is. It was up 4.47% today. And that is on top of what it has already done year to date, and in the last 2 years. It's just incredible. Jim, is it too late to buy NVIDIA? Well, you may not get the return that we've got in the last 2.5 years, but I do believe it's going up. I believe most of the AI companies are going up. And listen, if you don't want to invest in one singular stock, you don't like taking that kind of risk, and it is risky, much riskier than a portfolio of mutual funds and other things. You can buy an exchange-traded fund, which is, they're traded like a stock intraday. You can buy it in the morning, sell it in the evening if you want to. But the exchange-traded funds hold a basket of stocks, and that basket of stocks does not change, unlike a mutual fund. So you know exactly what you're buying. Well, it may change, but it doesn't change nearly as much as a mutual fund does. And there are some good AI ETFs out there. The one particular that I like is, the symbol is SM as in Mary H. It's offered by Van Eck, and it holds like 17 AI companies, mostly chip makers. But you take a look at it, talk with your financial advisor, and see if it's something that might fit into your portfolio. But that gives you a diversification among AI-related companies instead of trying to pinpoint one particular company. But again, never act on what you hear on this program. You need to take this information that you get here and set a meeting with your financial advisor, share it with him, talk with him and or her. Don't want to be misogynistic. Got a lot of good female financial planners out there. And make a decision for yourself after you do that. All right, I'm midway the program, so let's take another 2-minute break. Call me during this break, and I'll answer your question when we get back. And number here is 561-TALK, 561-8255. I'll talk with you again in 2 minutes.
Aiden Golf and Country Club invites you to become a member. Come tour our beautiful clubhouse, ballroom, and facilities. For a quality golf experience, sign up for our discounted special membership rates, low monthly dues with no quarterly food minimum or assessments. Folks love to play golf at Aiden Golf and Country Club. Cool off at the pool all summer. Enjoy excellent food and beverages from the snack bar. Even store your own cart, unless you like to walk. Call 746-3389 for special limited membership rates at the Aiden Golf and Country Club.
My practice has been built on accessibility, responsiveness, and a willingness to be proactive for my clients. I'm not afraid to make recommendations relating to your investments and planning. I do hope all of your financial decisions are good ones, but let's not rely on hope. Let's roll up our sleeves and get to work.
Jim has attained 3 professional designations: Certified Financial Planner, Chartered Life Underwriter, and Chartered Financial Consultant, which entails 20 courses of study with examinations and a comprehensive national board exam, administered by the Certified Financial Planning Board. Jim has been practicing in financial services since 1979, which includes investing, planning, and insurance to help you meet your financial goals. Among the many awards Jim has received in his career is his selection to the Guide of the Top Financial Planners by the Consumer Research Council of America. So if you want to work with someone who is working for you, call Jim at 756-4700 or email him at planning@financiallyspeaking.com. That's 756-4700 and planning@financiallyspeaking.com.
All right. Welcome back to Financially Speaking. I assume I didn't have a caller. Actually, I haven't even looked at the... No text from the producer. All right. Let me make an announcement first of all. The 21st of this month, which is 2 weeks, I have another guest. That'll be my third guest in like in a month and a half. I know I'm going nuts here. I don't have guests for 2 years, then all of a sudden 3 guests. But compliance has gotten to the point where money managers with mutual fund companies and what have you, they can't come on the program anymore. They don't like live programs. Afraid their managers might say something like, we're guaranteeing 20% or something like that. So I have actually had contact with some other sorts of people. In particular, this gentleman, Peter Anderson, he is a strategist that has a strategy that he manages on the advisory platform that I use with Genius Wealth Management, the Axiom platform. And he is the man. He is the owner, the founder, the CEO. So he can come on the program and do that compliance, I guess. But let me just read you this. This is why I wanted him on the program. I've got a little boilerplate here that kind of gives me a summary of his methodology, and see if you think this doesn't sound interesting. He believes in high conviction stock picking. He employs deep credit research to identify opportunities in equities, concentrated, go anywhere, long stock portfolio of 10 to 15 high conviction holdings. He focuses on situations that equity markets are often ill-equipped to assess, particularly with companies in early stages of capital structure or credit-related inflection points. Now, that one he'll need to explain. Also identifies other market inefficiencies overlooked by traditional securities analysts. So he's saying he might actually have something that other people don't, and that's what intrigues me. And I'm going to pick his brain when he comes on the program. Anderson utilizes disconnects between debt and equity markets created by differences in analyst training, asset manager organization, and fund mandate. So it just sounds really interesting to me. His performance has been stellar, and I want to find out why. And we're also going to talk about markets in general, of course, as we always do with people that come on the program. But I really want to pick his brain about his methodology. So 2 weeks from tonight, you will need to stay tuned for that. Now, the market is an all-time high. Jim, is that something to be afraid of? Should I sell everything I own in the market, or should new money be going into the market right now? Well, guess why the market's an all-time high? New money keeps pouring into the market. We have a lot of money right now on the sidelines still in money market accounts and other cash-like instruments. And it just keeps pouring in. And certainly that is the engine that's driving this increase. But market highs are nothing to be afraid of. I mean, we're going to continually have market highs. If we don't, what that means is the market's not going up anymore. And if the market's not going up anymore, that means the global economic system as we know it has imploded, and our money will be the least of our concerns. So yes, the market's going to continually go up over time. There are periods where it won't, but over time it will continually go up. And so the current market high is nothing to be afraid of. And I'm going to give you some numbers to back that up. After a market high, the average returns for the U.S. large cap equities per year. Okay, so we're going to look at a 12-month, 24-month, 36-month. This is the average annual return after hitting a market high. When some would say you need to sell because it's at a high. All right, following an all-time high being hit, the next 12 months, the average return of the stock market is 10.3%. All other times, it's 8.6%. Now think about that. Average one-year return after market high is 10.3%. The average return of the market in general at all other times is 8.3%. So it performs better the year after hitting a market high. What about 24 months? About 2 years later after a market high? The average return of the market is 8.0%. The average return in general for 2 years, 8.0%. So the same thing. What about 3 years? The average 3-year return after a market high is 7.5%. The average return of the market in general over a 3-year period is 7.5%. So market highs are nothing to be afraid of at all. Matter of fact, there may be something to be embraced, actually. All right, you get a steady diet daily of negative news that leads the most experienced investors to lose their conviction in their long-term investment plans at times, and they make the mistake of getting out when they shouldn't. And I'm going to give you 5 things that's right now with the world and with markets. The U.S. may be stronger than you think. That's the first one. Investors spent 2023, by the way, this comes from Capital Group, bracing for a recession that never materialized. You kept hearing it, didn't you? We're going to have a recession. We got to have a recession. The bond market inverted. There's no way we're not going to have a recession if the bond market. Well, we never did. Never had a recession. And it looks very much like we're going to have a soft landing. So there you go. Let's see. The U.S. Department of Commerce expanded at a stunning, GDP, I should say, expanded at a stunning 3.3% annualized rate in the fourth quarter last year. I mean, that is so far from recession, it's not even funny. Number 2, the AI productivity boom is just beginning. So the introduction of ChatGPT and other AI tools have garnered worldwide attention, but they're just beginning, though, to be utilized, and we don't know exactly how much that's going to increase productivity, but it certainly is. Number 3, more stocks are poised to join the market rally. I mean, this market rally that we've seen has been powered by, well, the Magnificent Seven you've heard about and just a few others. So as this rally broadens out, there are many more stocks that need to catch up to what the Magnificent Seven have led us into. So it's not over. Number 4, emerging markets are emerging as global trade evolves. So emerging markets are going to join the party. All right, number 5, ongoing breakthroughs in healthcare. Pharmaceutical and biotechnology companies have entered a golden age of drug discovery in the last few years, advancing therapies for a wide range of major diseases and extending and improving lives. And that will continue. I just heard recently about something they have discovered that may lead to a cure for Alzheimer's. And man, if that happens, Katie, bar the door. All right, I'm going to shift gears here. I don't have that much time. And I've had this on my pad here for a couple of weeks, and I want to share it. There's a misunderstanding about gifting. Some people believe there is a limit on the amount you can give. And there is, in a way, but not like people think. You know, there's an $18,000 per recipient limit now, but that's only to avoid having to complete a gift tax return. But completing a gift tax return doesn't mean you have to pay taxes, neither you nor the recipient. What that does, it just notifies the government that you're utilizing some of your unified estate tax credit. And everybody has right now a $13.61 million credit. So if you go over that $18,000 limit on gifting to any one person in a given year, you're reducing that 13.61 lifetime credit when you die. No problem. Most people, that's not going to be an issue at all. So you could gift $10 million in a year, and above 18 million or 18,000, that's just going to reduce your credit. So you'd still have, over $3 million of credit left to go to your state. You have to complete a gift tax return, but it's still not taxable. It doesn't create taxes for the donor or the recipient in that case. So, gift your money. Go ahead and give it. You're not going to create a taxable event by giving large sums to family members or anyone else for that matter. It is not a taxable event. And I can't tell you how many times I've been asked by clients, we want to give 30 grand to our son to help him with this and that. How's that going to affect taxes? It ain't, as we say in the South. It is not going to affect taxes. Now, what you need to do, if you are planning to start a gifting program, or you just want to make a large lump sum gift to someone, you certainly need to consult an attorney on that before you do it. But if you come to me, I'm going to talk with you about it and tell you what I'm recommending and what I think, and then send you to an attorney to ask him what he thinks. So he can give you some good advice as well. Anyway, I've got music in my ear. That means I'm out of time. And as always, this is Jim Taunton helping you make all of your financial decisions good ones. Good night, everybody.